This is Alan Bush with the Daily Financial Forecast for Thursday, June 4th. Stock index futures were under some pressure earlier today. This in response to the jobless claims report showing a somewhat larger than expected increase in claims. Since then, though, there has been some recovery. I would have to say that in the last couple of months or so, stock index futures have performed very well on negative news. I do not expect to see that change at all anytime soon. So the technicals seem to be supportive. The reaction to news is supportive. Also, we are not that far from new historical highs in the NASDAQ futures. Moving over to the currencies, the dollar index now lower for a sixth day. And we have the euro currency advancing, trading at its highest level in quite some time. This after the European Central Bank today announcing a massive increase in their bond buying program. Interest rate markets under some pressure, especially at the long end, and it looks like the bonds now have broken out to the downside. One common theme, I think, that is affecting all of these markets is there appears to be a growing belief that there will be some type of recovery later this year. The fact that the bonds have fallen more recently, the probability of a rate increase from the Fed at next week's meeting has increased only to 7%. The consensus view still is that there will be no change in policy, but there are increasing chances of a rate increase. Once again, a very small probability. That contrasts very dramatically from 2 or 3 weeks ago where the talk was maybe even negative rates. Negative rates are, I believe, off the table. Moving over to the gold market, if there is a better economy later this year, that could spur inflation and the gold market likely to advance. Either way, the gold market still appears to be in a bull market and higher prices are likely. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.